Perfect.
Perfection. Have fun, guys.
Thank you. Alrighty, alrighty. I'm just gonna go live in Discord. Okay, there we go. Cool. I think we're there. Thank you again, guys, for coming over here. Let me present to you Daniel and Nicholas from the Trading Indicators. We had a very nice live trading session 3 weeks ago. If you remember, we took a couple trades, right? We had some success along the way. I hope you, the trading bit traders, are surfing the wave, the summer wave with us right now. We have a great campaign going on. We see a lot of activity around the trading pit at this moment. Obviously, that's a very good thing to see. We hope everyone is well on your side. But yeah, first and
And
foremost, Daniel, Nicholas, nice to
hey,
meet you here again.
yes, hey guys, and Jan, quick question. I don't think, maybe I'm wrong. Oh no, all is good. Perfect. Okay, great.
Yeah,
Yeah, well, it's great to be here once again with our dear friends from the trading pit. And yeah, we'll see what we can do today in terms of live trading. Interesting market conditions. The PPI report just came out with above than expected, higher than expected inflation data. So basically every single index, tumbled a little bit. We'll see what we can do today to perhaps trade some bounce trades or maybe a continuation trade. So we'll keep an eye on all these things today.
awesome. Yeah, glad that you're here. Daniel, we've done the challenge, and our goal was like reporting on this challenge, taking
Yes.
our traders on the journey. I mean, you guys are professionals. You've traded a long time out there, but you brought a lot of learnings with you, I guess. So let us start with this little presentation where you can really
Yeah.
dive deep into how has it been, how was the journey with the trading pit and the future challenge, and what can our traders learn from?
Perfect. Yeah. Yeah, absolutely. It's been fun. Of course, trading is always fun and challenging at the same time because, it's a challenge after all. Why challenging? A couple of things. First off, we typically, and let me just go forward here to the slide that we've prepared for this topic. Typically, we trade the live market. So taking on prop trading challenges is something that we not do very often. And as such, we had to, find our bearings first. So what we've done is took we took the $100,000 prime challenge with the trading pit, the one here in the middle. And it started off really nicely. So steadily you can see the equity graph here. Really nice, good performance, good profit factor. The way you want to see it with very little drawdown. Uh, and then this happened for the first 28 days. So as you may know, as seasoned prop traders, a challenge typically takes 30 days. So it was my goal. All right, we have 2 more days. We still had about $1,500 to gain in these 2 days. So well, let's do something because I was running out of time. At the same time, coincidentally, I was starting my vacations on that very day here. I was taking a flight from Montreal to Germany, and I arrived in where did I arrive? I forget. In Paris and then in Hamburg. And then I took 3 different trains from Hamburg to my home city here in Rostock because there was some construction going on. And I set the objective in mind, okay, let's try to finish this challenge before it runs out. Unfortunately, in these situations, when you force trades, when you don't trade by the book, when you don't follow your process, you will make mistakes. And as you can see here, it didn't end up very well. I traded way too high. Unfortunately, also caused to some degree by the fact that I lost internet in the train at some point, so I couldn't react properly to it. And I busted the challenge after all. So that didn't go well. But the good thing is, I have quite a few different lessons learned from that experience. So and I will not give up, of course. We're going to try again today to once again pass the challenge. But what are these lessons learned first? Well, one lesson learned was what I don't want to do, and which I think cost me in the end dearly. I'm not going to do DCA anymore. DCA stands for dollar cost averaging. It can be a good tactic to get a better entry price for sure. As you don't want to miss out. So you enter early into a trade, and if it goes against you, you take another position and perhaps another one. that can be fine. But I think it is also a very big factor when it comes to busting your drawdown limit, because you're increasing your position size more and more. And it also kind of opens the door for what's called revenge trading. So things go against you and you DC into your position. Now you're already quite a bit in the minus. And then you say, oh my God, I'm in the minus. Let's do one more time. It's going to come down again. This is a recipe for disaster. So on my next challenge, it's going to be part of my personal policy, no DCA, no dollar cost average. And we're not going to skid into a trade. Instead, what we're going to do is we're trying to optimize our entry limit, where we're going to get into the trade. From now on, for this challenge, what we will do is we will wait for the perfect entry price. Even if we miss out on the trade, I don't care. We're going to be very patient with our entry price. So that's lesson number one. Lesson number two is you really need to know your symbols. That also cost me dearly. At some point, I don't know if you guys noticed, but if you have tried to trade corn or soybeans or wheat futures, and this is not published on TradingView, so if you look at the trading times in TradingView, it's nowhere to be found, but this market closes between 8:45 a.m. and 9:30 a.m. It's not there. So I learned this the hard way when trading just stopped and then gapped open at 9:30. This has cost me a couple of dollars at that point as well, because I was in the position which then gapped open. Something to be aware of so that you don't trade into this period of time. So that's lesson number two. We really need to know our symbols. The other thing is that with the trading pit, most of the symbols are not available for the micro contract. It's just a mini contract, which are quite expensive. Actually, too expensive to trade to stay in the drawdown limits of my challenge, which I had, which was this middle challenge here. So as a result, for today's challenge, I took on the next one to the right here, the $150 challenge, because it allows me to trade a bit bigger, which comes with the fact that some contracts are only available for the regular contract, but not the micro contract. Okay, lesson number three is avoiding ad hoc trades. Even if you run out of time, don't do it. Follow your process. Bank on the setups that you trust in. Don't force trades, because that's what actually cost me in the end. All this drawdown, I got stuck in trades which I would normally not take, just so I wanted to make the deadline of not having to extend the challenge. So follow the process. And lesson number four is don't double dip. What do I mean by this? So, in order to pass the challenge, you will trade multiple symbols all across the future space. There's so many symbols you can trade. But what you don't want to do is to take the same setup on two different symbols, which are heavily correlated. One prominent example is, for example, going long NASDAQ futures and at the same time going long S&P 500 futures. Two symbols which are heavily correlated. So basically, you're doubling your risk, because these two symbols, for example, will move in tandem. And there are many other symbols as well, which will do the same thing. So what we're going to do instead this time, we will do, before any trade that we open, we will do what's called a correlation analysis, just to make sure that these two symbols are not directly or inversely correlated. And we're not doubling down on our risk, so to say. So these are the four key lessons learned from the previous challenge. All right. Now, why should we follow a rigorous trading process? Well, it gives you protection against ad hoc trades. That's typically what's, where the gambler comes out of you, and you don't want to be a gambler when it comes to trading. What you want to do is you want to be within a repeatable process. Why is repeatable important? Because if it's systematic, if the steps are very well known that you're going to take to find a trade and to place a trade, then it can be analyzed afterwards and optimized. Very important. If it's all ad hoc, there's really no optimization potential there. So you need to have some sort of process in place. And it will also help you with your time management. Because if it's a systematic process, you don't have to overthink it too much. You set your rules, you trade accordingly, and then you move on with your life. All right. Now, what's our process? I'm going to get to the live charts in just a bit. First off, identify your market edge. Find a setup which is proven to have an edge over the market. I'm going to show you our key setup that we're going to be trading for this challenge in a second. Master risk management. Mostly master position sizing. That was a big issue as well. I'm used to trading my own risk tolerance with live money, but which was not suitable which I learned in the beginning, for passing a prop trading challenge. So this risk was too little in the beginning. We have to ramp up our risk, but only to the extent where it's not too much. We're gonna exceed our drawdown limit. So, and then maintain discipline. So what are these steps? Real quick, identify your market edge. The setup that we will be trading today, mostly, and for this prop trading challenge, is our bounce setup with what's called a liquidity capture. Here's an example of this. This is a gasoline futures contract on the 5-minute time frame. Price goes up. You can see it here into this key resistance level, which is shown to us by one of our indicators. And we have what's called a liquidity capture. It's a bit hard to read, but this is what's written up here. This is basically a candle which approaches resistance or support, if it's to the downside, in this case resistance, and has abnormally high volume. And if this comes together, chances are that prices will bounce, so the name comes from, bounce off this level to the downside. It's a really nice setup of a really good reward to risk ratio, because your stop loss will just be above this level. So if it doesn't work out, no harm, no foul. You lose a little bit, but the bounce can be quite significant if it happens. Here's another example. What is going to happen repeatedly at the same level? Prices go up. You see this little shaded area here. That's a liquidity capture. Prices drop down, up, down, up, down, up, down. Eventually, it might be broken or go above your stop loss, and that's fine. We take the loss, but that's going to be the setup we're going to be focusing on. It's one of our favorite setups, and we've back tested this to the gazoo, and it can have really nice performance. This setup traded. We simulated a back test on NinjaTrader, by the way, also one of the platforms supported by the Trading Pit, on the 50-minute time frame on the MNQ futures. Very nice performance, similar on oil futures and many other symbols as well. So this is one of our best setups that we can find, which will give us this market edge. That's what we're going to be focusing on today. All right. So that's the setup of the edge. Secondly, risk management, especially position sizing. Okay, so instead of trying to guess your position size, we are going to be very rigorous about it. So how can we master position sizing so that we, at the end of the challenge, we will meet our goal? And the goal, of course, is to make our profit target, $9,000 of this particular challenge. So how can we estimate our position size? Well, let's put down a couple of assumptions. Assumption number one, this is from experience and how the setup works. Our profit factor will be, I believe, around 1.35. It's a decent profit factor. Everything above 1 is considered profitable. The higher it is, the better it is. It might be higher for some symbols, but on average, I believe that's going to be our profit factor. We will take around 150 trades in that 1 month. Okay. And we want to make $9,000. With these numbers, you can do a bit of math and calculating. And if you do this, then you will get these position sizes here, or these risks per trade. So if our reward to risk ratio is 1 to 2, meaning we risk 2 times as much as we can. So this is a reward to risk ratio. Yeah, we risk 2 times as much as we would gain. In this case, most of the trades will win because our profit target is fairly nearby compared to our stop. We can risk $600 per trade. If our reward to risk ratio is 1 to 1, it's $400. If it's 2 to 1, basically our reward is 2 times bigger than our risk. It's $300 per trade. 3 to 1, $250. 4 to 1, $200. So these are the numbers that everybody can calculate beforehand. And if it works out with this profit factor and this number of trades, we should get to our profit target at the end of the challenge. So, and thirdly, maintain discipline, because that's perhaps, for me at least, the hardest one is because I'm quite impulsive, especially if I'm challenged, like with a trading pit challenge. But what we're going to do is we're going to have a checklist. So we're going to ask ourselves these questions before executing the trade, at least in our head, silently. Is the setup still valid? Am I chasing the trend or the trade? Is there already a correlated trade open? Then we don't want to take it. Am I within my risk tolerance? Is the market open long enough for this trade to pan out? Did I place my stop and target properly? So that's going to be our checklist. So in hope of all these things, we will this time successfully pass this challenge. Okay. And by the way, guys, you do have, or everybody will get a 20% discount this summer with the trading pit challenges simply by entering the coupon code summer20 and by going to this link here, tradingindicators.com/prop, which will get you to a checkout form of the trading pit. Okay, with this being said, let's get to it. So I'm going to switch over to our charts. If I can find them down there. Perfect. Okay, so I'm going to get to these alerts here in a second. Let me just quickly show you which markets we are considering primarily today. Okay, so what you see here are our overview charts. So on the left-hand side here, we have the NASDAQ futures, the S&P futures, micro Dow, and micro Russell. You can see here all these index futures, they dove down after the inflation data came up, and then they fully recovered almost by now. So prices went up again. So across the board, they're fairly correlated this morning based on this economic data. Secondly, here we have our metals and our commodities. So we have micro gold, we have the full contract of silver. This one is not available in the micro contract. We have micro crude oil, and we have natural gas, the Widowmaker. You can see it here. Then on the third chart here, and this is going to be our last one that we're going to consider today, we have the 10-year treasury notes, the corn futures, soybean futures, and micro Bitcoin. All right, so these are our overview charts. And of course, if you remember, guys, we want to trade a very particular setup. And I can see right off the bat, because I'm used to these visuals, that micro Bitcoin, for example, has such a setup right now. And one more thing before we switch to the big chart is all these charts here are on the 15-minute time frame. Okay, so that's something to consider. So let's zoom in a little bit on micro Bitcoin just to explain to you the setup that we will be looking for today. All right, so I'm going to switch to this big chart here. This is basically the same chart, but just on the full screen mode. And we're going to go to the Bitcoin futures contract, MBT. All right, we can see Bitcoin tumbled as well this morning after the inflation data came up. In fact, since all-time highs, this was an all-time high in Bitcoin. And once this loads here, we will see that a couple of things are happening here on this 15-minute time frame once this is all loaded. There we go. Okay, so what do we see here? Well, I see the setup we're looking for. I'm not sure if you guys see it as well. We can see price coming down all the way to this key support level. Okay, this red line is the support level. It's also labeled here. And what else do we see? We do see, look at this label here, a liquidity capture event on this bar, on the previous bar. This is the bar which wicked into this key support level, couldn't fully break it, but still stayed within that range, and this bar had abnormally high volume. And our philosophy is, if this happens, something is up. Something is happening right now. Something is driving up the volume. And oftentimes, it can be seen as somebody stepping in this case, buyers are stepping in and potentially causing prices to bounce off this zone towards a higher price level. And this is exactly the setup, what we're going to be leveraging mostly for this challenge. It's one of our most profitable setups. It's a setup I've back tested in NinjaTrader over and over again. This one works properly. So how will we trade it? Well, okay, so the way to trade this, and if you start with Bitcoin here, is we would place our entry, buy limit entry, at this support level. Do you see this red line here? That's going to be our entry level. Our exit will be below this level somewhere. But for this, we have to be strategic. And in the sense that, is there something we can relate to on the chart? Well, not really. You can see we had some swing lows here, but that's right at this level. So what could we relate to here at this level? Well, the only thing I can see, let me just quickly hide those labels so we can see it a little bit better. I'm going to switch off mentor mode just to keep the chart a bit cleaner. We can see it here. This will just reload real quick. What can we see here? Niklas, let me ask you, what are you seeing here? I do see this swing low here potentially as maybe a stop loss. It's a bit too far away from my taste. But if you want to give this trade a bit more room, it's definitely an uptrending symbol. It's recovering right now after this big drop, after the all-time highs in Bitcoin. And I could imagine that potentially we will see a bounce at this level, at least towards this zone of control of our volume profile.
Yeah, I agree. And I think that's a good stop loss. I mean, just today in the past couple hours, Bitcoin has
Yeah.
swung, nearly 6,000. So it's only
very
that stop loss
volatile.
looks far away. It's barely 2,000 away. So I don't think it's that out of the picture.
Perfect. So let's plan out this trade. Let's not, overthink it. Let's plan out this trade. Let's follow the rules that we have set for ourselves this time. Okay. So I'm going to go to my trading panel here in TradingView, and it's going to be a long trade. We will enter by limit order, and the entry price will be just at this level here, at this support level. So we're going to wait for prices to come back. I don't want to chase it. That's definitely not what I'm going to do. So that's of course also a rule. We will patiently wait. Our stop loss will be down here. I'm going to position size in a bit. So this is, of course, too much of a position size here. That's our stop loss. And our profit target would be, I believe, I would say we probably can recover. I mean, I do see the zone of control right here, which is would be right there. And I could imagine prices to recover, to bounce off this level. Maybe somewhere around here, I can imagine this trade to go. What do you think, Niklas? Is this a bit too?
I think that's even, personally, I think that's way undershooting it. That's not even 1/20th of how much it's dropped in the past hour.
Yeah. And just that it's a big zone of control here. So I want to be a bit careful, but let's assume, what would this give us? What would this reward to risk give us? Well, this is actually something that we don't have in our table. This would be a 1 to 3 give or take reward to risk ratio. We would risk 3 times as much as we would gain. So in this case, yeah, you're right. Probably we should shoot a little bit higher, maybe towards the middle of this range here, at least to get a 1-to-1 reward to risk ratio. What do you think? I think that could be a
definitely, yeah. And I think, that might take a couple hours to play out, or maybe not.
Yeah. So now, okay. So let's just assume this. We'll see if we're going to pull the trigger on this, but let's just plan this for now. Let's see if we have a 1-to-1 reward to risk ratio. So maybe, something like this. If you use these swing lows here as a resistance level, so about the same amount of risk as we would gain. Now, of course, risking $2,000 is too much. This would not be within our risk tolerance for this particular trade. So let's remind ourselves, what was this risk tolerance we talked about? It's right here. So with a 1-to-1 reward to risk ratio, this would be the position size. And maybe I probably should also calculate this for 1 to 3 and other levels, but for 1-to-1, it would be $400 per trade. So let's position size accordingly. Let's go back here, go to our position size panel here of the units. So instead of risking 10 contracts, I would say maybe 4 contracts would give us, no, also too much, 2 contracts. Yeah, 2 contracts of micro Bitcoin. It's a very small trade, but we're going to take it and we're going to shoot for risking $400 as per our trading plan, and to also win $400 if this works out. So I'm going to place this trade right now. And I like it. It's exactly the recipe that we were looking for. Liquidity capture right here. If you come down one more time, yeah, this could be a nice trade. If it takes too long, if prices take off, we will cancel this limit order. So there's also going to be a bit of a timer on it, because we want this bounce to happen quickly. Go down here to this level and then bounce up. If it takes too long to bounce, oftentimes prices will grind lower. So we're going to cancel this limit order if that happens, but we're going to keep an eye on it. Okay. All right. Perfect. And by the way, guys, do you see these alerts coming in on TradingView? These are alerts set up to notify me when such a setup happens. So right now, for example, on MNQ, we're going to go to the symbol right now. We do have a liquidity capture at a support level. So let's switch over to MNQ, the micro Nasdaq futures, and let's see what we can see there. So I'm going to go here. All right, we can see this bouncing off. Let's see what the chart will bring to us. It looks a bit curious. Yeah, that's the case here. I'm not going to trade this one because that's kind of an abnormal setup. We did go above this support level here. Prices recovered quickly and then went down again, and this caused the liquidity capture as prices came from the top down to this liquidity capture area. It's personally not my favorite setup. I prefer it, like in Bitcoin as we had it here. I prefer where prices come from below or above to a level and drop off like this. That's my kind of setup I would like to see. Here in MMQ, it looks a little bit a bit dicey. So I'm not going to trade this here because we came from below, then above, then down again. We're still consolidating on this particular one. So we're going to stay on the sidelines for MNQ for now, just to see where the market settles after this big move afterwards. So we're going to wait here. Okay. By the way, everyone out there on YouTube, on Discord, or on Zoom, if you have questions, please don't be shy. Put your questions into the chat box or the Q&A box, whatever is available. And Jan will keep an eye on all these questions as we proceed. All right. So, by the way, talking about alerts and time management. So something I also didn't enjoy so much about the first challenge, even though it was very enjoyable, work with the trading pit and doing these challenges, is that it took a lot of time. It took away some of the time that I normally need to spend to just run our business, to do all the stuff that we normally do, because it took a lot of time to find these trades. So what I've done is I have set up automated alerts in TradingView, which will alert me. You can see it here, which will alert me automatically if a certain setup comes up. And for example, you can see it right here on Bitcoin. The one I found, we just discussed it. We had a support liquidity capture. We actually placed the order based on this. And now the one here on micro NASDAQ. And the way this now works in TradingView, which is really cool, is you can define an alert for an entire watch list. So what I've done, little life hack here, trading hack, is I have created a watch list called the Trading Pit with all the, or most of the tradable symbols that are tradable with trader weight in the Trading Pit. You can see them all here. There are like 30 symbols in here. And what you can do then is you can define an alert for all these symbols at once in one shot. So when any of these symbols gets me this setup, a liquidity capture at a support level or a liquidity capture at a resistance level, I will be alerted, which is a huge difference maker. No longer do I need to check charts like this all the time to wait to see if a setup comes in. Now I will simply be alerted. That's a great time saver for me. Okay, but let's have a quick look at what else do we see in the markets, and let's have a look here at. Oh, did we just get one? No. Let's have a look here at ZS. Okay, soybeans futures. Oops, 1 second. That was not the right chart. Let me go back here. Soybeans futures, ZS. Here we also did have a liquidity capture. So you can see it here. Once this loads, and of course, this always takes a couple of seconds to load. But what we see here also on the 50-minute time frame is that we came down to the support level. We had the capture event, and then, here the idea would be to bounce off, but it looks a bit too bearish from, well, even though this is a kind of a nice zone break retrace setup here, but I'm going to stay on the sidelines this one too. This is a very expensive contract, would not give us much leeway. So I trend to, only trade the cleanest setups when it comes to things like soybeans or corn futures or wheat futures and so forth. All right. Okay, so let's go back to our overview charts and let's have a quick look at Bitcoin. Where are we at Bitcoin right now? Okay, so prices are coming down. Now remember, if we don't get filled soon, the next, I'd say this bar or the next bar, I will cancel this order. Because in that case, our idea that we wick down or come closer down to a level and bounce up from it, it's no longer valid. Then we are kind of in a grinding setup where, things are just slowly grinding lower, and that's not the idea of a bounce trade. Okay, so here, we'll see if you're going to get filled. I will definitely not chase this trade. I either get this ideal entry price, from my point of view, or I don't get it. But I will not chase this trade. All right. Okay, so moving back, let's have a look. What else do we see in the markets today? So here we have the equity futures, which are recovering to some degree. Let's look at the metals. Okay, gold was interesting to me here. Look at all this key level here, which gold had a lot of trouble with coming above. Let's analyze this a little bit more. So I'm going to go to our full chart here, and I'm going to switch to gold, micro gold futures. Okay, so once again, this is going to be opening up here on this chart in just a second. And what you will see on this chart here is that gold, first of all, if you zoom out a little bit, gold has been suffering quite a bit. It's been dropping quite a bit. It kind of stalled out here from this bearish trend in this key level. And once our levels indicator has loaded. Still 1 second. It just stalled out. Sometimes, because the complexity of our indicators is so high, TradingView times out. What you do in this case, you just, refresh the symbol as I've just done here. And hopefully this will load now. And once loaded, you will see that we do have a key level around this price level here. You'll see it in a second. It's still loading. Hopefully it's gonna not time out. Sometimes if the TradingView servers are overloaded, these levels will not show immediately. You have to be a bit patient with it. But what you would see is the following. In fact, what I'm going to do, I'm just going to make this chart a bit bigger here, where we had it properly. This one here. So this is the gold chart. And what you see here is, look how much price struggled with this key resistance level. Look how many capture events we had here and here and here and here. And price kind of struggled every single time with this level. And on top of all this, look what's happening here with our volume profile indicator. This one here, the high volume node, the zone of control coincides in this particular case with this resistance level. And if prices come up one more time to this level, I'll be the first one to pull the trigger here to short this one, because this could be a great bounce trade. If you give it a bit more room, maybe just above the swing high here, if we come up to this level, another bounce, in my view, could definitely be in play here. So we're going to patiently wait for this gold contract to potentially come back to this level. All right, so this was gold. Let's see, what else do we have? Here we have silver. Silver kind of is a no man's land. It's also a very expensive contract. We have a nice liquidity capture up here. See this one here? At the resistance level, beautiful bounce. But here we have to wait. Down here we have oil. And let's see what's going on with oil. Let's zoom in a little bit more into crude oil. So I'm going to go here to our crude oil contract. And I'm patiently waiting until we get new alerts coming in here. So while this happens, I'll just going to flip through a couple of charts and discuss what we're seeing here. So oil has been a bit of on a downtrend here. The trend kind of switched over in the last couple of bars. But what happened here is we did come right into this resistance level. We broke above it, but prices kind of got drawn back into this resistance level. Now it's going to be interesting to see of what's going to be happening. Are we going to hold this level? And then I think next stop is going to be this zone of control, because that's going to be acting as resistance. But if you're going to go below this level and lose this level, once again, I think another leg downwards could be in play here. Another nice trade with a nice reward to risk ratio with the stop loss just above the swing high here, and our profit target potentially at this swing low around this level. So here we're going to keep an eye on what's going to be happening with oil, whether we can hold this level or not. All right. So that was that. Let me go back to our overview chart. Okay. Micro or regular natural gas. What's happening here? Interesting setup too. Okay, let's zoom into this one as well. Even though that's a symbol I don't like trading too much. It's called the Widowmaker, meaning it's oftentimes it reacts a bit erratic, so to say. But nonetheless, if the technical setup is right, we could potentially also find some good trades here. So what's happening here? So here, if you zoom out a little bit, and once again, look at these beautiful setups here. Liquidity capture off the support level, and we bounced off. Another liquidity capture down here, and we bounced off. And now, what I'm be waiting for is for prices potentially to come up to this resistance level here. Give us a capture event, and then potentially play the bounce trade, which would be in line with the overall bearish trend of natural gas. Now we are short-term bullish here, now bearish again. If we come up here, I think this could be a great short entry. Once again, with a beautiful reward to risk ratio. Our stop loss would just be above this resistance level right here. All right, so here we're also going to wait for this to happen. Okay. So here we're going to wait. And let me go back to my overview charts. And let's see what's happening here. So Bitcoin is still stalling out at this level. The 10-year notes in no man's land, approaching the zone of control here. Corn futures bounced off. Bounced straight once again off this support level. And soybeans are right here, pulling back a little bit. But let's have a look at corn futures. Yes.
Yeah, and also maybe we could take a look at micro euro.
Micro euro, okay.
Dropping.
Yeah.
I'm not sure what it's dropping to, but it's dropping.
Okay, yeah, it's definitely dropping. We went from bullish to bearish right there. And let me just quickly reload the volume profile here. There we go. Let's have a look at M6E, the micro euro contract. Let's have a look at what is happening here. Prices are dropping. We went right into this zone of control as per our volume IQ indicator. And let's see what the levels are once they load here. So TradingView is a bit slow this morning. This happens sometimes if their servers are overloaded. But we can see here, yeah, we are dropping. And if we lose this zone of control, we might lose it here. We may see an acceleration to the downside even further after we stalled out a little bit here. But if we lose this level, I think the next stop would be this support level down here. Even though this is not the trade that we were looking for, but potentially, especially if we lose this level, we could also trade the breakout here, breaking below this zone of control. So I'm going to keep an eye on this, Nicholas, or maybe you can keep an eye on this. If we see signs that we're going to lose this level, maybe we're going to short micro euro here with our stop loss just at this zone of control and our profit target just above this support level down here. All right. So that's something to keep an eye on. I'm not going to chase it once again, but I want to see this symbol to lose this zone of control. There's still a chance we're going to bounce back and going to be stuck in this level. Oftentimes, these price areas where the volume is really high, we can see this here in our volume profile indicator, they kind of act as glue and they trap price in, and price, can't escape that price level for quite some time. Okay. So here we're going to keep an eye on. Let's see what Bitcoin is doing. So I'm going to switch back to micro Bitcoin. Oh, look at this. Yeah, I don't like the fact that it's grinding lower. So that's, we'll see what's going to happen. If we get the fill, maybe if I don't see an immediate bounce off this level, if we grind lower like this, I will close this trade much earlier because that's not the ideal bounce situation that I'd like to see. So once
And there
again,
is a low volume node just below too.
yeah, we may accelerate to the downside. So I do want to see an immediate action very soon off this key level here. If this is not happening, then we will just switch back here. Then we'll pull the trigger a bit earlier on this trade. And this is actually the beauty about manual trading. You can backtest all year long with, let me just show you here, with your preset rules and have a bot trade accordingly. And this can be quite good. But I think you can even do better manually if you take the time. If you look at the setup, if you can do some discretionary analysis on top of all this. So we're definitely going to be doing this for Bitcoin here. What we can see here, look at what just came in here. Support liquidity capture on gold. Let's check it out. All right, so I'm going to go to gold here, to our gold symbol. First, I'm going to check out the alert. It's right here. It just came in. Now, I'll click on it and, oh, look at this. Big drop in gold. Big drop in gold, liquidity capture, and I'm going to prepare this trade already because that's exactly what I kind of like. It jumps down this level. We want it at the level like somewhere where it goes even deeper potentially. Stop loss just below here. And if you get filled, we may see a very nice bounce off this level. I don't think this bounce is going to be too high. Definitely going to be below the zone of control because we are bearish. Gold's been dropping, but nonetheless, we may see a nice bounce off this level. So let me just quickly get rid of this thing here so we can zoom in a little bit more. So if we enter around this level here with our stop loss just below this support zone here and our target around here, again, 1-to-1, how much can we risk if you remember? I forgot the number. Was it 400? I believe it was $400. So we're going to add 5 contracts here. Let's say 4 contracts to stay within our risk tolerance. And we're going to place this order at this level here, anticipating that we're going to bounce off this key support level to the upside, at least a small bounce, and then we're going to book our profit here. So that's going to be our trade for gold. And once again, I'm not going to chase it. Even if it goes above it, I'm going to be patiently waiting for this to happen. So let's see what's going to happen here with this gold bounce trade. It has all the parts to it. The reason why I don't shoot for a bigger profit target is because of what I see before this year. Look at how gold dropped. It's definitely in trouble. It's been very bullish for a long time. Now it's in a bit of a recession. It's pulling back on at least on bigger time frames. And this may as well continue, but I do still think we're going to see a bit of a bounce at this level, and we can profit from that. So see if we can get our fill here for this
On
gold
the
contract.
I was actually looking at gold yesterday on the 4-hour, and if you look there, yeah, definitely, it looks like it's going to be pulling back.
On the longer term, for sure. Yeah, gold is struggling. A quick maybe discussion of what we see in gold on the bigger time frame. You can see it here. If I switch, just configure this for swing trading here. Of course, typically gold is not swing traded, at least not the futures contract. You can do it with some ETFs, for example, with physical gold. But here, once this reloads, what you will see is that gold is really struggling off this key resistance level. And this is on the daily time frame. And look how the principle of liquidity capture applies also on these big time frames, on these higher time frames. Same thing. Price wicks into a resistance level, we get a liquidity capture, and it bounces up almost immediately. Down here, price goes down to this key support level. We get a liquidity capture, price bounces off again. This shows you the power of this particular setup. And this also is the reason why this is one of our favorite ones to trade, because it's very reliable. And oftentimes it will offer you a very nice reward to risk ratio. Okay, so what's happening here? So we did get our fill on Bitcoin, and we may get it on gold here. I'm not going to chase any of this. This is going to be my golden rule for this challenge. But let's have a quick look at Bitcoin to see what's going on there. So we got our fill here. The only thing in Bitcoin is I do want to see a quick recovery. If this grinding move lower continues, that's not a classic bounce trade. Bounce goes in quickly, goes up quickly. That's what we want to see. These kind of grinding lower thing, oftentimes it's just going to keep on grinding lower for quite some time. I will close this trade with a small loss if this is happening. But let's see. Let's keep an eye on this. Let's see what's happening here with Bitcoin. The idea is for it to bounce off this key level, this key support level towards higher price points. So we'll keep an eye on that one. And let me just quickly go back to our gold contract just to see what's happening here. Oh, we almost got the fill. Look at this. But don't chase it, Daniel. Be disciplined. It came down here almost to the tick to this level. We're going to be waiting. I'm rather going to miss out on this trade than to force a trade. But this is kind of the ideal situation. Prices go quickly down, then quickly up again. Perhaps I was a bit too conservative here. It's okay.
I wouldn't chase it though. Yeah.
Yeah, no, I'm not going to chase. That's my recipe for disaster. That's the gambler in me. We will not do it.
Especially because you got filled on Bitcoin already, I guess, right? And
oh,
both are
correlation.
similar
Oh, we actually skipped the step. Oh, thanks, Jan,
Yeah.
for reminding
No,
me.
no worries, no worries. I'm just looking at both charts, and they are really in the same situation, approaching liquidity zones, especially Bitcoin on the 4-hour right now.
Yeah, and let's see if we can actually do some substance or substantiate this claim. That's a really good point, Jan. Thank you for reminding me. I almost forgot. Let's see how these two symbols correlate. This is our indicator called TI pairs, which basically does a correlation analysis among different symbols. So let's see how Bitcoin MBT down here correlates with gold. So Bitcoin, we have it down here. Gold is the one here, MGC. So if you now go down here to this level, we can see that you are absolutely right. On the longer term, they are fairly correlated with a score of 61, but short term, they are extremely correlated. You're absolutely right at 84. So we now actually did what we're not supposed to do, Jan. We kind of double dipped into the same setup with two different symbols because they're very correlated. And the way this matrix works, if you look at the little scale here, everything light blue is highly correlated and highly directly correlated, meaning if one symbol goes up, the other symbol will also go up. If one symbol goes down, the other symbol will go down. So that's one type of correlation.
Wow, you guys are building great solutions over there. Very, very cool tool. I like it a lot.
Yeah. And actually on top of this, Jan, real quick, since we're talking about this one here, is symbols can also be indirectly or inversely correlated, meaning if one goes up, the other one is going down. They're still correlated. You still have to be careful not to double down with the same setup. If you go long the one symbol but short the other, you're essentially also doubling down on the same setup because you're using correlated symbols. And what I've done here on Bitcoin and gold is actually against my rules. That's a good point because I got carried away. Once again, that's
I mean,
my
you didn't
first.
get filled on both positions. Everything is
That's
fine
true.
in this case. We just need to hope that Bitcoin yeah, pushes as well.
Well, there should not be hope in trades. So let's revisit these two trades because, as you said, maybe you should fix it. Oh, and this gold bounce.
Look at that. Yeah.
Not chase it, Daniel. It happened here. We just had a very aggressive entry down here, which would give us a perfect entry price. It was like 2 ticks away. Whatever. Let's look at Bitcoin. Let's see what Bitcoin is doing. Yeah, Bitcoin is just chilling out here. I don't like the grinding move, as I mentioned before. If we see this to continue, we don't see a bounce happening very soon, I'm going to close down this trade much earlier than being down here. So that's not the idea here because it's grinding downwards slowly. So I want to see a bounce happening very soon, but we'll see. It might happen. Okay, so let's move on. What else do we have? Let me go back to my overview charts. What do we see here? We can see that Nasdaq. Let's go back to Nasdaq. What do we see here after these news that we had of the PPI numbers? So let me go in here and open up. Oh, we see a bit of a bounce here in Bitcoin. Maybe we'll see. Maybe it's happening now. Okay, so let me go to MNQ, the Nasdaq futures. All right, where are we right here? So first of all, in terms of levels, we are somewhat in no man's land. So levels are not shown yet, but once they display, 1 second here. Once they display, where are they? Timed out again. Yeah, the servers are really busy this morning, Nicholas, for some reason. Well, we are in between support down here and resistance further up.
Well, it was the numbers, production numbers month over month, I believe.
Yeah, this inflation. Yeah, the
PPI.
price producer index or something. It's an inflation index. Inflation came out higher than expected, which drove markets down initially. This was at 8:30 here, but then they recovered, and now they kind of in decision-making process. What's going to be happening with the rest of the day? Either we're going to completely recover, or we're going to continue the bull run that we had in the indices, or perhaps we're going to see another leg further down. And this is actually also a pretty cool trade because here the market will decide. And this is a trade that we've done numerous times before. It's not our bounce trade that we had before, but here I would just trade the breakout out of this level here. If we break out to the top side, well, potentially I'm going to look at a long setup. If we break out to the short side, I will potentially consider a short setup in this particular case. It's not our bounce trade, but nonetheless, it could be an interesting situation, but we're going to let the market decide what it wants to do. So right now, really at this price level, it's anybody's guess. We are right at the zone of control. You can see it here. And the overall bias is bullish. We can see it here on these bluish lines on our volume IQ indicator. If you scroll further back, you can see it. We are bullish. So if I had to take a decision or a direction, I would choose the bullish side because the overall market direction is bullish. And it's always easier to trade with the overarching trend than against it. But I will not pull the trigger right now. Let's see what the market decides what it wants to do, and then we might engage into this breakout direction. All right, let's move back. What else do we see? And you can see I'm patiently waiting. I am patiently waiting for these alerts to come in. We also had some good setups here with gold and Bitcoin. And this is going to be my trading plan from now on. The alerts will tell me when to check my charts, and then I will look at them and place my trades accordingly. So this is going to be the way I want to trade, which takes much less time than observing the charts manually all the time, because that's just too exhausting. Okay, so let's have a look. What else do we see? Gold futures. So gold is seeing the bounce. Oh my goodness, it's okay. It's still not good to chase this trade, even though this when the bounce is happening, and that shows the power of these liquidity capture setups.
Where did we fill on Bitcoin, Daniel? Just because they're correlated there.
Yeah, we did fill on Bitcoin. Let's have a look. If we go here to our Bitcoin chart, we're at this level down here. Also see a bit of a nice bounce here to the upside, and it's coming. It's developing into the nice direction. That's the bounce that we were hoping for, a nice bounce off this key support level, which for some reason we can't see it. There's some issue of TradingView today. I guess the servers are overloaded. Normally you would see the level here, but
Oh,
TradingView couldn't.
liquidity IQ, Daniel, is actually on it's on the daily. Maybe that's the problem.
Oh, yes. Okay. See, that's why I think pair trading is a real thing, where somebody looks over you. Instead of blaming the technology, we do some pair trading. Thanks, Nicholas. And once this loads, yeah, we can see it clearly now here. We do see the series of liquidity captures right here. And where we bounced off from. Of course, we're coming down a little bit now, but let's see what happens here. I do want this. Yeah, I want to see this to recover shortly, but we'll see what happens. So off to a good start, at least here with this particular setup. Okay, let's go back to our overview chart. So we said here we let the market decide. Yeah, there's nothing going on here. Now you can tell once you train your eye a little bit of how these setups work and how you can trade off these labels on these levels here, you can very quickly dismiss or qualify a particular symbol as being interesting right now, or perhaps as being kind of stuck in a range where it's not really interesting to trade. So nothing much going on here. Let's go to our metals. So gold is bouncing off, and this shows you that this bounce in gold and the bounce in Bitcoin that we've seen, that completely correlates or is justified by our correlation matrix here. So here we have gold, MGC, and down here we have MBT Bitcoin. If you look at the numbers, 88 short-term correlation, 62 long-term correlation. These are big numbers. Yeah. They can be better. 100 is the perfect value. So if something is perfectly correlated, it's 100. If something is perfectly inversely correlated, it's minus 100. But still, these are in the upper field, 62 and 86. Yeah. And what else do we see? Oh, 88 and 62. These were the two numbers. For example, if you look at MES, which is the S&P 500 futures, and NASDAQ MMQ, look at the numbers here, 93. This is why you never want to take too long trades or too short trades across these two symbols. You're basically completely doubling down your risk because they will move in tandem. One goes up, chances are the other one will go up as well. Okay. All right. Let's go back to our Bitcoin here. It's grinding a bit lower, which, from a technical point of view, what I don't like about this one is that we could not go above this swing high here. And to me, it kind of feels like, Nicholas, I don't know if you agree, that we're making lower highs here, kind of lower lows as well. So I'm still a bit skeptical. This is not the classic bounce trade that we've typically seen. It still kind of grinds a bit lower. So I still might close it out prematurely before we hit our target, just because it's like a classic downwards pattern here with lower highs along the board. But
certainly, yeah, it seems to be grinding lower, but Bitcoin can be tricky. I would maybe tighten the stop, but maybe maybe that's going to get us faked out.
Yeah, I would just close it out manually. Yeah, I don't think I'm going to keep it blindly open like this because even though I like the bounce trade a lot, this grinding lower is not what I like to see. The perfect bounce trade is what we potentially saw in gold here. Look at this one here. Oh my goodness. This
a good sign for Bitcoin, though. I mean, it's going up. I don't know. I wouldn't prematurely close the Bitcoin yet.
But this
if it's going to be correlated, you're technically not missing out on gold.
Yeah. Yeah. And do you see this one? We missed out on it, but
yeah,
you know what? We shouldn't be mad about this. I mean, we completely called it, which is the good news.
It is like last time, Daniel. I was impressed with the hit rate you had in the last live stream, right? I mean, you nailed the whole session. Here again, you are on the right side of the market.
Yeah,
let's just wait. I think something I asked last time already, like in the example now of Bitcoin, you don't pull the stop loss to break even in this specific case, or like trail it a bit closer.
I probably would if I'm, especially with a very far away profit target, like in Bitcoin, where it's quite far away. It's kind of a longer term trade. I will definitely tighten my stop loss at some point. And in this case, also I already discussed it because I don't really like this this grinding lower here. This is not the classic bounce setup. Gold, look at gold. it's a completely different story. Down and up. That's what I want to see. In and out quickly. That's the proper bounce. Bitcoin, it's kind of grinding lower. It's not the proper bounce setup. So because of this, and this is where my discretion comes in, I will probably actually, I'm going to close this one out. I don't like this grinding lower, so I'm going to close out this trade. It's a small winner. It's good to have a very tiny winner booked. Why not? Of course, it's just a small little thing towards our big goal of 9,000. But this grinding lower, it's just it feels very bearish right now in that sense. And sometimes you just have to trust your feeling, especially the lower highs. They're concerning me. What I'm seeing
Something
here.
that's interesting I noticed in the past, let's say 24 hours, is the divergence between the Russell and the Dow and NQ and ES. So the Russell and the Dow being kind of one category. They really seem to take off more, the Russell, at least the Russell, I think. Because it's not at all-time highs. Neither, I believe, or is it at all-time highs? I don't think it
the
is.
Russell is definitely not, no.
Yeah, but it took off quite a bit
Yeah.
yesterday, and the Dow as well.
Mhm.
And now they're dropping. If we look at the Russell's dropping while NQ is kind of holding ground.
Yeah.
And the Russell's actually dropping back to a nice round number, 2,300, which I think is also a liquidity capture area, at least on
Yeah.
the 30-minute or the 15-minute. So
I
it might be an
agree.
interesting long opportunity, maybe a little lower.
Yeah, and
with
just to
slow scaling.
substantiate this a little bit, where do we have it? Where is the M2K? 1 second. MES.
The third row, right
Oh,
there.
here we go. Yeah, exactly. Yeah, you're absolutely right. So look at the weak correlation right now between the Russell, and kind of the Russell has been the outlier for quite some time, but only 50s compared to the MNQ, and only, well, actually a much higher rate
With the
compared to
Dow,
the
though, it's totally correlated.
Yeah, the Dow, it's 90s, high 90s. So the Russell and the Dow work hand in hand. So if you go to this chart, let's have a look here. Let's see if we can substantiate. Yeah, look at this pattern. These two charts, if I adjust the zoom a little bit, they look absolutely identical. But these are two different symbols. Look at this. Up, little breaks, up, down, little up again. That's exactly the same thing. They are
volume
super
profiles.
correlated. Yeah.
They're both losing that same recent high volume node.
Yeah.
That's on the 15-minute. What is liquidity IQ on it? It looks like it's on the daily or something.
It's on the 30 here.
Really?
Yeah.
Okay. I guess I had it on the 15-minute or something, but the level that the Russell's come down to now was some sort of resistance at 2,300.
Yeah. Oh, close.
I just wanted to say,
Yeah.
hence my question with the stop loss at break even. But it's what it is. It's what it is.
Yeah. See, maybe I'm see. Everybody has its different strengths and weaknesses. I think my strength might be to call the trade, but then to run through it that might not be my strong suit. But our indicators are essentially designed to call trades, right? To call, hey, this is a great setup. Yeah, absolutely right. But we'll see. We'll see what happens here. Even if this Bitcoin, I still don't like it as we're grinding lower. If we go above this level here or above this one, then I'm much more convinced that we're going to see a nice bounce. But we'll see what's going to happen. Let me go back to gold. Yeah, gold.
I think also there what we
I'm going to close
gold,
this order here. It's old news now.
You didn't not to criticize you, Daniel, but we saw the correlation with gold and Bitcoin, and gold is going up, and I was like, well, they're correlated, so maybe you're not going to be as frustrated if we
certainly
wait.
Sounds like criticism to me. Okay. Okay, perfect. Yeah. Okay, let's have failed to cancel or about cancel anyways. Okay, perfect. All right. So let's take a quick look. What are we seeing here? So, all right, I'm gonna go back quickly to the Dow and the Russell. So these are two very correlated symbols. Let's zoom in a little bit more to understand what's going on there. What's the technical picture on these symbols here? So here on the 50-minute time frame, that's what I want to choose. On the Dow, micro Dow future contract. Close this down here. There we go. And yeah, we Very bullish. We broke above resistance here. Nice follow through after this breakout. We hit resistance up here, liquidity capture, and the bounce, as we always expect in this particular case. And now kind of stuck here again in this zone of control. It definitely feels a bit more bullish to me than the Nasdaq and the S&P 500s, because we just was still in this level. We didn't go below this low point here, so technically we made a higher low point. And I think potentially we could see another attempt at this at this high level here, this resistance level at 45,000, which is a big psychological number as well. But once again, we're stuck in the zone of control. I don't want to pull the trigger here. This can drag out quite some time until this price level is resolved at this point. So we're gonna see what's gonna happen here. Okay, so same picture on Russell. What's going on MNQ? Yeah, also still in the zone of control. You see it when it reloads. What's interesting is that we completely recovered. Actually, now we're breaking almost to the up point here. And this kind of looks to me that we will take out the previous high of the day, which exactly. This is somewhere here. And I think if you break above this level, let me actually quickly put an alert here. Another nice thing of trading is you can put these alerts very easily. I want to see this breakout move when it happens. And
What I like to for this. Oh, sorry. Go ahead, Daniel.
Oh, I just want to say here in this case, instead of using a limit order, I may just enter it. Ah, there we go. We had the breakout. It feels to me we're gonna push power through this level right now. What do you think, Nicholas?
I agree, but one thing I don't like is it came down quite a bit, touched that level. I feel like this move can quickly reverse, and to quite a great magnitude. And what I would actually do is I would be looking at the Russell right now, because the Russell is not already overbought in the short term. It
And they're
is
still related,
coming down to a lower.
Yeah.
I think if it correlates, it's a little bit lower risk, but it's up to you. But I would be looking at the Russell maybe to think for a slow scale and to capture the same.
Yeah. But you know what? It kind of feels bullish to me. But again, this would be chasing a trade. This would, one of the first things I had my checklist. Don't chase a trade. This would kind of feels like chasing this upwards move. Okay, let's have a look at the Russell. I'm gonna discipline myself, Zen, and not chase this trade. Let's go to the Russell. Let's see what we're seeing right here on the 50-minute time frame. And you're right. There is a lot more room to catch up to here in this of this big retracement. We're far away from this level. This is still a kind of a breakout level here. We broke above resistance, which is down here. And we're right here. And here, I guess I would wait also to see if we go above this zone of control. What we could do potentially is we can try to see what if we change the reference time frame for our support and resistance level to something less. Let's say 15 minutes. I just want to see if this pulls up something more technical around this level here. If it does, this could be something of interest. Let's have a quick look. Now it doesn't make a difference. Yeah, I'm gonna wait. Again, my golden rule is to not chase any trades. Let's not place it here. Let's wait until either we hit a level or a new level is being formed, and then we take the contrarian bounce trade with liquidity capture, as we've done as per our process. So here I'm going to switch back to the 30-minute reference time frame. All right, to gold. What's going on gold here? So gold is now it's stalling out a little bit after this nice bounce move here. I wonder how this affected Bitcoin. By this logic, Nicholas, if I were looking at Bitcoin right now, I would imagine Bitcoin went up a little bit, also stalling out potentially. Now let's have a quick look. What's going on here?
Yeah, and I think Bitcoin is kind of related to NQ. So if NQ starts to break out, Bitcoin's going to hold up.
Oh,
but
you
it
think
does? It did the same thing as gold, pretty much. It looks like
kind of stalling out a little bit here. Yeah, absolutely. And here, I'm not surprised it's actually stalling out here, because our zone of control of our volume profile indicator is right here. And oftentimes this can act as resistance as well. So we may see prices to stall out a little bit here. If we get above this level, I think there's a good chance of prices pushing even higher from this level.
Yeah, it's thin air above there. And if we get above that, and I think just early this morning, right? Or yesterday, that was all-time highs on Bitcoin, wasn't
Yeah.
it?
Yes, it was
And
crazy.
being
Yeah.
so close to all-time highs, I bought a little bit of it down there where we were thinking, um, just because I'm hoping that, if it does make that move fast and the air is thin, it can
Yeah.
go up and test all-time highs again soon. And if it breaks them, who knows?
Yeah. Yeah. No, it's definitely a decision-making point. You're right at the zone of control. If you can break above it, we may see a nice follow-through. If not, and when we see another push to the
Oh, one
downside.
one other thing, Daniel, I think is that we should do, I've been trying to do it in my own trading, is not looking at the futures chart for Bitcoin, but actually looking at BTC
Little spot
USDT,
short. Yeah.
because we're not getting the full story on the
That's true
future.
because futures
Um,
don't trade on the weekends, for example. There are some levels that are being missed if we only look at the futures. Let's go to the actual or BTC USD chart, the
Oftentimes too,
spot.
the
Yeah.
brokers, I think, maybe because they have to manage their own positions, they'll moves lag the actual crypto sometimes. So sometimes the crypto will start moving and the future doesn't. That would be an interesting correlation to check.
Yeah, actually, we can do it. That would be a very interesting correlation. Now you're giving me ideas, Niklas. Let me just quickly go in here. For everyone watching right now, this is our correlation indicator. Niklas just suggested instead of, well, let's correlate futures Bitcoin with spot Bitcoin to see if one lags the other or one leads the other somehow. So let me do this. I'm going to go to the settings of this indicator here, and I'm going to swap out, let's say, corn or soybeans futures here to spot Bitcoin. Where do we have it? Okay, let me just go here to BTC USD. Let's say Bitstamp is the contract I typically look at. This one here. This will not take a couple of seconds to load, but once it loads, let's have a quick look to see. Well, I'm assuming almost perfect correlation, but let's see. Maybe it's not, and that would be a very interesting observation if the futures lag behind the actual move in the spot market or vice versa, which could give you an interesting opportunity for arbitrage. I doubt it's possible. Others would have probably spotted it already, but it's always good to check. All right. So back to while this loads. Oh, and it's breaking out here. We can see NASDAQ is breaking out a bit. And the Russell and Dow, they are lagging behind, but the Dow actually does look interesting. Let me go back to our Dow futures here. Real quick, why our correlation matrix is. I was still stuck here. Okay. Still stuck in the zone. I'm going to wait. I'm not going to chase this one either. All right. So now the matrix has loaded. Let's see how it holds up. So we're going to contrast MBT with spot Bitcoin. And yeah, it's a 100% correlation. Okay. So I guess they are fully correlated, as you may think. But what's interesting here, actually, Niklas, you were right. Even though they're fully correlated price-wise, look at this rocket symbol here. BTC actually leads the futures, meaning it tends to move first. So if you spot a price move in spot Bitcoin, it may take the futures a little bit to follow suit. That's interesting. Okay, so that's something we can take away, and we're going to investigate a bit more. Maybe next time when we come on here, yeah, we can elaborate on this a little bit more to see how we can do some arbitrage with spot Bitcoin and futures Bitcoin. Okay.
Yeah, I just figured before when you went on the gold chart, the futures gold chart is like $30 difference to the CFD one. I was looking for your level on my chart. I was like, okay, that's like you have something like 3,350 and I had 3,330 or something. So quite a big difference. Yeah. Hard
Yeah.
to.
But I guess the correlation once again will be very closely related.
Yeah.
I guess one drives
So
off the other. But
it's really useful when things are very volatile. I noticed this trading Bitcoin futures yesterday is sometimes, let's say on a pullback, if you're looking to dollar cost average, if you're watching both charts, like I noticed a couple times on the crypto, we were plummeting, and then all of a sudden a big bid came in on the DOM and it started to find support while the future kept dropping further because the spread, or sorry, the order book on the brokerage isn't the same. So I would buy in at those points, expecting that, hey, it's going to reverse. And oftentimes, yeah, it was a good sign.
yeah,
Interesting.
yeah,
Okay.
no, for sure. Yeah. Yeah, these correlations there is super interesting to see. Not just because you don't want to double dip, play the same setup twice, but also sometimes they give you a hint of what may happen next for one particular symbol just by looking at some other symbol which acted first, which is pretty cool. All right, great. Yeah. So, trading is a game of patience, of course, as it should be. It's not a game of entertainment. And what I will be doing for this challenge is I'm going to patiently wait. I have my alerts set, and the way I set them is they pop up both on my browser, when I'm on my computer, or on my cell phone, on my iPhone. I set them up as pop alerts to the TradingView app, and I will be alerted whenever a liquidity capture event comes in, just like here. And then I will open up the chart, and I will then look at it. If I like the chart, if I'm not already in a trade which is correlated with this setup, I will plan it out using, once again, let me quickly go back to my slides here, using our game plan. It's so important to have a game plan. Where was it? This one here. So that's our game plan based on our reward to risk ratios. We plan out our stop loss, we plan out our profit target, and from trade to trade, they will be different because we like to place them at technical levels. And sometimes they work out like a 1-to-1 trade. Sometimes they work out as a 2-to-1 trade, like we can gain 2 times as much as we can lose. Sometimes it's 1-to-2 and so forth. And then based on our game plan, that's going to be the risk that we're taking. We're going to pick our position size based on this table to take out all the second guessing from our trading, just like what a bot, an EA, an auto trader would do. It has predefined rules, and we're going to do this too. By doing this, I believe you're going to be combining the best from two worlds. We can still use our discretion. If you like a setup manual, then we can further refine it. But then still we have our systematic rules in play, which will tell us exactly what to do, especially in terms of risk management. Because this is the one part where you don't want to let your emotions take over your discretion. You just stick with it. This is the best recipe to not do what I've done when I panicked, when I was running out of time. Right here, 2 days before the challenge went out, and I tried to make it within 2 trading days. Oh, okay. So
makes perfect sense.
Yeah.
First of all, thanks for being so transparent about that, Daniel.
Well,
I mean,
yeah, it's but it's still challenging for us, these prop trading challenges, as we mentioned before. We typically trade live accounts on the future space, but also on the options space and swing trading space. So this is a new way of trading for us, a challenging one because these targets are ambitious. I think nobody would trade his live account with such a profit target within 1 month, where you have to make 6% within a month. That's aggressive. It's doable, but you also don't want to force it if the setups are not there. But yeah, it's something that we're going to attempt, and I think step by step we're going to get there. And the next step, just a little preview, maybe next time when we come on with the trading pit here, is we want to develop actually a bot which can trade a portfolio of symbols with the objective in mind to pass a prop trading challenge. A bot that you can backtest beforehand. You can configure it based on the challenge parameters. Every challenge is different. It's different drawdowns, different requirements, different targets, different limits per day. So all this can be programmed into the parameters of the bot, and the bot will keep on trading. And of course, then ideally, in an ideal world, also the bot would do some correlation analysis, making sure don't double down and stuff like this.
Super interesting topic. I mean, we also had a trader here a couple of weeks ago, automated trading systems. It's a big topic here also at the trading pit. We are big fans of that, and we allow EAs also in our challenges and earning phases.
Do you know which platform he was using for the?
He basically uses everything. He can program Python, PineScript for MetaTrader. So he just he trades futures with it, CFD, crypto. So yeah.
Okay. Yeah, definitely interesting. One quick thing before I believe we're slowly coming to the end of the session, but real quick, just get another alert coming in. NG, natural gas, is hitting resistance with a liquidity capture. Let's check it out real quick. So here we're going to go to resistance. Oh no. What happened here? Just, oh goodness. It was up here. I guess we just
on
missed
that.
it.
Oh my God.
Oh
Wow.
boy, this could have been my
that was
challenge
a
right
miss.
there.
Yeah.
Oh my goodness.
That's where we need the bot for, right?
Yeah. No,
Yeah.
100%. And now we have a capture down here. But do I want to catch a falling knife? Maybe. Look at this. Just get one down here. It's
I don't
tempting.
know about that one. I would, because
Yeah.
it's liquidity captured, but volatility is lowered. It's not even in the zone now. What do you think? I don't know. That looks like a real
It's-
rejection of any hopes of a long.
It happened before a couple of times. You can see it here, these big drops. They really stopped out there. Let's have a closer look real
This
quick.
is the biggest candle in a couple of days,
That's
though.
yeah, that's a big candle.
Yeah,
Like, it's
something
not-
must have happened with
looks
in the
like
natural gas
fundamentally
space.
influenced all the
Yeah.
almost, right? Yeah.
Okay, but let's just, I'm not gonna pull the trigger. Let's just plan it out real quick, just to see what would be done. And then we can still use our discretion of whether we want to pull the trigger here. So you're right. We're definitely bearish. This it's moving down. So what I would do in this particular case is I would give a very small, I would aim for a small bounce. A nice entry, maybe around this level here, right at this level, stop loss, just around here, and my profit target, just below the zone of control. A 280, 290, 1-to-1 reward to risk ratio. And once again, I'm going to consult my table because I have a bad memory. What was it? There we go. $400 per trade. So it can go back in here. Let's just plan it out. So in this case, we could not do two contracts. So one contract it would be. It's the full contract of natural gas. And, you know, I would even, oh, down here. Yeah. I mean, I like it personally. Nicholas, you don't like it? I think it's possible. Nice, quick bounce down. Big
Maybe, yeah.
support
I
level here.
I don't hate it. I don't hate it.
I don't hate it either. I think it's a nice one. It's looks good to me. No, I like it because these are the things where you see these bounces often. Quick drop and a quick move up. And we have a very reasonable profit target here too. Just a small bounce. It is possible, but once again, I'm not going to chase it. But
Maybe that is one to chase.
that is one to chase? No, not for me. That train has left the station for me, as you would see.
Yeah,
in
and I
German.
personally wouldn't exactly. I would wait to see what happens. Maybe if we caught it on the liquidity capture, but here
Yeah.
also I am still thinking that was a pretty big down candle, and
But
you
there
know,
must
maybe
have-
it is a breakdown.
I wonder if something happened real quick. And yeah, I think, do we have a couple of minutes left?
Absolutely.
Yeah.
Absolutely.
Let's just see if there's something that came in here related to natural gas. What time is it now? Let me just quickly see. It's 10:47. Where are we? Here, 10:47. Yeah, 10:30. API crude oil change. Okay, maybe this was somewhat related to natural gas. Who knows? Let's have a quick look at oil. Something happened there as well. Okay, crude oil. Where are we? There we go. Yeah, also a bit of a drop. Not so dramatic. So maybe this was unrelated to what happened in natural gas. But yeah, no, oil's not. It's a no man's land somewhat. All right. So we'll see what's happening there. I will keep an eye on this particular symbol. Let's just have a quick look one more time. Oh, Niklas, look at this. It's breaking out. And now, actually, let's go quickly, Jan, if you don't mind, real quick to the S&P 500 futures, the MES, because we are approaching, I believe, this key resistance level. And I'll be curious to see what might be happening there.
Yeah, and look at the yeah, maybe that'll actually be a short on a
Yeah,
liquidity bounce.
it would be a
And
short. It would be a small, again,
Yeah.
small target. We are bullish. The bounce might not be substantial, but if we get to this level, and once this loads, and 1 second, it's not loading. Once this loads, we will see we have our key resistance level right here. If we get in there, we don't break it. We see abnormally high volume and liquidity capture. I'm thinking maybe a quick short, a quick bounce off this level to the short side will be in order. Just quickly see the load. It's still working. Jesus, it's so slow today. I think there's something going on with the TradingView servers. Normally this is much faster load. What I can do actually, because I have it here on the chart, I'm just going to make up this chart a bit bigger. There we go. Okay, so this is the picture here. Oh, it's not even yeah, it's this resistance level here. So we're gonna wait until we get into this level and see. Maybe we're gonna have a liquidity capture. A quick bounce towards this zone of control might be in order once we get to this level, but we're patiently gonna wait for this to happen. All right. So, okay, here we're gonna wait and let's quickly look at natural gas one more time. Now we're just hanging in there. Yeah, it's definitely a key level. You can see it here. It's a small trade. Yeah, we'll see what's going to happen. I think we're going to see a bounce off this level, a small one, maybe to this level here, and then we take a bit off the market. If not, we're going to close at this trade with a small loss if it doesn't pan out. All right. Great. So I think this wraps up this session more or less. I'm going to keep an eye also on MES here. If you see liquidity capture, I'm going to trade this one to the short side. Once again, small stop loss just above this level here, because if we break it, I think prices are going to grind further upwards to all-time highs in the indices, target just below here. Yeah, perfect. Okay.
Alrighty.
Yeah,
So we have 2 to 3 instruments that are interesting for the later hours of the session,
yes,
for maybe the next minutes.
Absolutely. Yeah. Just a quick reminder, everyone, if you want to take advantage of a summer special that's going on right now with the Trading Pit, all you need to do is to enter the coupon code SUMMER20. If you go to this link down here, tradingindicators.com/prop, it will bring you directly to the proper position in your Trading Pit on the Trading Pit website to take advantage of this special. Also, big thank you to everyone for being here. Thanks, Jan, once again for hosting us. And yeah, I'm curious to see what's going to be happening with this challenge. I will report back no matter what in a month's time from now. So maybe then I'm going to be back on with the Trading Pit with perhaps some additional lessons learned, or maybe with some good news or bad news. We'll see what's going to be happening. And by the way, one thing which is really amazing about prop trading. So even though I didn't manage to pass the first challenge, but I only lost 180 bucks, which is amazing. Imagine I had traded this with a live account. I would have lost thousands of dollars. So that's, of course, the beauty about these prop trading challenges. Your risk is very limited.
Yeah, the risk is limited, and what I also have to say is you learn from it. The way you described it today, writing your mistakes down from the past month, and learning from it. I think this is worth every cent, because we figured it today, right? We have a checklist. We know what to do. I believe Nicholas and you guys are really crushing it together. A great tandem in the market. We've learned a lot today about all the learnings Daniel took away from his challenge, but also about the correlations between instruments. I am not a futures trader myself, and so thank you also from my side. Yeah, one day. But yeah, it's been a great session. It's always a pleasure to have you both here. So thank you so much. Good luck for you guys for the challenge. I'm keen to hear in a couple of days or weeks how this is all going with you. And yeah, see you next time.
Bye, guys. Thanks, Niklas.